Hello, good weekend to all. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of US markets from an intermarket analysis perspective, as always, for Monday's trading session, the 22nd of February 2016. This video is being brought to you by CFDs.com. Be sure to visit the website and certainly qualify for that generous cash opening offer, which is a good, healthy bonus of 25% on your initial deposit. Alternatively, you can visit the educational site www.cfds.education to certainly learn more, where I update my charts and analysis constantly throughout the trading week. Okay, now let's try and decipher exactly what's happening here in terms of the actual US markets. Now, the main story on Friday was firming US inflation keeps Fed rate hike on the table. That certainly is your a theme, I think, from my perspective going into next week. Rising rents and healthcare costs lifted underlying US consumer price inflation in Jan by the most in nearly 4.5 years. So the confidence by some of the Fed members, and especially Ms. Yellen, is certainly warranted given the fact that this is the highest inflation reading in 4.5 years. The Labour Department said on Friday its consumer price index, excluding the volatile food and energy components, energy, which is obviously the biggest laggard, increased 0.3% last month, the biggest gain since August 2011. Following 0.2% in December. This was a firm, broad-based rise in core inflation that should dispel the notion, which is very important, evident in market-based measures of inflation compensation, that the economy can't generate any inflation, which is very, very true. It certainly can, especially with oil prices now obviously basing. If I bring up the chart of oil and certainly give you an insight here. Now, the oil price itself has an interesting scenario. You have failed to make a lower low. Okay, bear that in mind. Okay, the pivot low that we can see here now is at 26, and we failed to. The last pivot low was 27.6. This was 26, and after that we have not made a pivot low. Remember, there's been a oil output freeze, okay, which has been agreed, and now there's talks of the Saudis discussing a potential. If I can just recollect correctly, if I bring up the article, which I just read a few minutes ago, with regards to the Saudis. And let's bring this up for you. So you have the Saudis, okay, US Saudi oil ministers face rival US producers as price route bites. Our Saudi oil minister, Mr. Ali Al Naimi, will for the first time face the victims of his decision to keep oil pumps flowing despite a global US shale oil producers struggling. US shale oil producers struggling to survive the worst price crash in years. While soaring US shale output brought on by the hydraulic fracturing revolution contributed to oversupply, many blame the 70% rise price collapse in the past 20 minutes primarily on Naimi, seen as the oil's most influential policymaker. During his keynote on Tuesday at the annual etc. Naimi will be addressing US wildcatters and executives who are stuck in a zero-sum game, which is very, very true. OPEC is at a cutting production. They increase production. That's the predicament we're in right now. Well, that's his version of events, basically. Okay, so itself, remember, you have an oil output freeze, which really does put a potential support in, given the fact that it will prevent any lower low or previous low from being hit from my perspective. And the 4-hour chart clearly demonstrates that you have an inverted head and shoulders formation. So this right shoulder is building. The right shoulder is building, and we're looking for a potential thruster and move higher. Now, from my perspective, that $26 pivot low certainly will hold. Very hard for the markets to go below that $26 level. If anything, we're looking for a higher low now and looking for higher high. So therefore, you're looking for a potential short squeeze in the actual price of the price of oil. Now, the other factor as well, obviously, as we all know, with regards to commodities, let's just bring up the commodity index. And this is all important, folks, before I even attempt to discuss the S&P 500. Now, bring up the energy sector. Let's bring up the energy sector. Let's try and decipher exactly what's happening here. Very, very similar concept with regards to the energy sector as well. We haven't put in a lower low. We've certainly held that gap fill at this region at 53, and we've certainly pushed higher. Now, going to a 60-minute chart, we certainly are holding resistance up here at 58.3. The next zone, if we were to thrust higher, would be that unfilled gap at 60. And that's a zone that we certainly need to observe going forward, okay? In terms of the price of oil and the energy sector moving the this market. Also, we need to look at is the dollar index. So if let's bring up the dollar index for you as well. I have already posted a chart of the dollar index, but I'll certainly share the dollar index situation with you here right now. Now you have an inverted head and shoulders formation on the 4-hour chart, but the daily has a potential for a H&S formation and a test below. Now, given the inflation data coming out stronger than expected, that certainly will help the US dollar to a large extent, and therefore looking at higher prices. So again, it's interesting. If the dollar were to go higher, then that would keep the oil prices at bay to a large extent, unless there was some geopolitical shock. As we all know, dollar and commodities move in the opposite direction. So that certainly is a interesting scenario, and that's one that we'd certainly need to observe. Now, looking at the wisdom tree commodities ETF, which is one of the big ones that are gone along with the CRBQ, but this generally tends to be more accurate. You also have the same inverted head and shoulders formation here too. As you can see, we have not made a lower low, and certainly no, if anything, we're making a higher low and looking for a higher high. So looking to potentially break out, and this is obviously a contracting, falling wedge pattern. Wedge pattern too, and therefore we're looking for a potential move higher. So everything is indicating higher from a commodities perspective, but again, the dollar index will certainly dictate as well. So all eyes on that dollar index and which pattern it actually obviously makes. Okay, now, like I said, inflation was the main theme on Friday, and that certainly will be the main theme going into this week as well. We did have the Baker Hughes US oil rig count down as well, so that certainly supports oil to a large extent. Okay, now the other two factors that we need to look at is the Asian market. So if we bring up the chart, the Nikkei, which I've already shared as well, you are holding previous support equals resistance here in that zone, and it's certainly looking weak on the Nikkei on the daily chart. You have an unfilled gap left below as well. Looking at the Shanghai, we're holding previous support equals resistance. Again, a resistance zone, and certainly looking weak. Okay, so an important aspect to an important insight there as well. Okay, now bringing up the chart of the Nasdaq itself, you certainly have held at diagonal trendline support. We certainly have bounced. Looking at the daily chart, we are still holding that fib 75%, so therefore you're looking at resistance on the Nasdaq now, given the thrust higher that we've observed. You have multiple unfilled gaps left below as well, so them again, they are certainly coming into the equation as well. So looking for a potential pullback for now. Okay, so given the stronger inflation data on Friday, that will obviously keep the Fed rate hikes on the table, and that will be proved to be potentially negative in the interim. Although having said that, similar chart with regards to oil, you have this inverted head and shoulders pattern, folks. Okay, so you're looking at a pivot low here, looking at closing the gap on the Nasdaq, and then obviously looking to potentially move higher. Very similar with the price of oil. So again, it certainly seems that the market's interwoven with the price of oil, and certainly seems to be interlinked. But for now, you are looking at gap fill support of 4110, and then obviously you got 4020 gap fill below. So again, they are the zones that you'll be watching. 60 minutes chart certainly looks exhausted for now, and now looking at potential gap fill support, closing the gap below from my perspective. 10-minute chart again looks exhausted, so lower high, no more higher highs and higher lows. That certainly has ended, and the first target will be that 4105 gap fill, and then you're looking at 40020 gap fill as well. So those two gaps certainly are vulnerable to being closed on the Nasdaq itself. Now let's cross verify the Nasdaq with the biotechs. Bring up the daily chart of the biotechs, and you can see that we are certainly exhausting here as well with the bearish engulfing candle and consolidating within it. 60-minute chart, you certainly are holding this key diagonal trend line. You have an unfilled gap below that certainly needs to close, and that certainly will need to be observed. Okay, looking at the 10-minute chart, on the actual biotechs as well, you are holding resistance. It's a lower high, and it's all about that gap fill below. So the market certainly will be targeting and aiming for that gap below. Okay, looking at the next chart, which is the semiconductors, again certainly looks exhausted on a 10-minute chart, no higher high. 60-minute chart, you have a bear flag, and that certainly seems to be the predominant theme here. You have an unfilled gap just above, some work that I need to get rid of, which was previously here. Okay, so again looking exhausted, looking at a bear flag formation on the 60-minute chart, and therefore you are looking at weakness on the actual Nasdaq going into next week. Looking at testing those gaps below, so you have an unfilled gap here, and then you have an unfilled gap here as well, and although you do have support in this region. So again, for now, looking at resistance and looking weak, and therefore the Nasdaq will be a risk of trade. We know that the Shanghai and the Nikkei are into resistance, which confirms that. Okay, and we know that the dollar index now at the moment is has a potential inverted head and shoulders formation, which in turn will help commodities if a dollar goes higher, and vice versa. So again, that certainly is something to contemplate. Okay, let's bring up the chart of the S&P 500 now. The daily chart of the S&P 500. You certainly have a case for a potential bull flag, so that certainly needs to be watched. An inverted head and shoulders formation, so you are looking at potentially going lower to create that right shoulder before we start to reverse. The 60-minute chart, you have the unfilled gap still open at 1895, and you have the unfilled gap at 1965. So any inverted head and shoulders movement for now, you need to create the right shoulder, and certainly remains open. Although you do have an unfilled gap at 1939 as well, so watch out below. Okay, so the 10-minute chart at the moment of the S&P 500 is into resistance. You have a lower high, you're into gap fill resistance, and we are looking at closing that gap at 1895 first and foremost. Okay, now cross-reference that with the Russell 2000 and 3000. So let's just bring up the Russell 3000 first of all. Let's just bring up the daily chart. Daily chart certainly is exhausted to a large extent, is holding that key resistance zone here, and therefore looking for a potential retrace. We have two unfilled gaps left below that certainly need to be closed. So again, all eyes on those gaps. 60-minute chart of the Russell itself again has held resistance here and looking to hold that resistance. You have unfilled gap below and below. So they are the two zones that you'll be watching out for in terms of the next zone to potentially visit. Okay, 10-minute chart of the Russell 3000 again has held that gap fill resistance. Okay, and therefore looking to potentially move lower. So that's a zone that we're looking for. You have an unfilled gap left below. Here we go, and that's the gap that we certainly need to close. Okay, so you're looking at gap here, and you're looking at gap fill support here. Okay, so again, this is a zone that we certainly need to watch out for. Okay, so very, very important to observe. Okay, now the Russell 2000, let's just bring up the Russell 2000. There we go, looking at the daily chart of the Russell. Previous support equals resistance, and that certainly is holding. There is a strong case for an inverted head and shoulders formation brewing now. It's more or less everywhere now on almost every index. So you have the inverted head and shoulders here, looking for a retrace before we start to snap back higher based on the fact that oil prices have stabilized. Okay, and therefore looking to potentially push higher and going into a bullish philosophy. So for now, it's a retrace on US markets, which is more or less confirmed on European markets, and therefore looking for a potential retrace, and then before we get this nice rally higher. Okay, 60-minute chart, you obviously have held resistance, looking for a retracement. You have an unfilled gap below here and here and here. So they are the gaps that we could potentially close before we start to ascend higher. Okay, so Russell itself is confirming the S&P 500, which means resistance for now, and before we attempt to rally higher. Okay, so very, very important. Let's bring up the Dow Jones as well. We'll bring up the daily chart. Dow Jones, you are into resistance, you are holding resistance, and that certainly is a resistance for now, looking for a potential retracement. 60-minute chart of the Dow Jones, let's just bring that up for you as well. Again, into that resistance zone, and certainly looking to potentially hold. You have the unfilled gap left below. You have a bear flag formation, which is here, which is obviously playing out at the present, and that's the zone that we are looking out for. So looking for weakness early on. Okay, in terms of the Dow Transportation, let's just bring that up as well. Looking at a daily chart of Dow Transports, you are now back into previous support equals resistance in the Dow Transports. So again, that's certainly something to think about. Okay, and will indicate resistance. So therefore, Dow Transport's previous support equals resistance, and you are looking for a potential move lower. So overall, the themes remains that the US markets are into resistance. Expect a pullback before we potentially get a rally later on in the week. Okay, the energy sector is now into resistance as well. It's all about oil and how that reacts. The financials themselves on a 60-minute chart certainly have bounced quite impressively, although you do have resistance in this region. So again, looking at potential weakness, and then obviously you have the unfilled gaps left below that may well be targeted. Okay, oil prices certainly do remain bullish, although again it will depend on what Mr. Naimi has to say, and obviously the PMI data on Monday, European and US PMIs, will dictate the strength for the price of oil, and that will obviously dictate the next market move. Now, another factor that we haven't taken into account here as well is the fact of the VIX as well. The VIX now has retraced and now potentially into support. On the daily chart, this 60-minute chart, the VIX again certainly oversold, is now coming into potential support. The 10-minute chart as well into that potential double bottom support and looking to potentially bounce. If the VIX were to move higher, then you all know what will happen next. It will cause the US markets to increase fear, cause the US markets to sell off. So again, that's quite an important factor to observe as well. Okay, I think that's a market wrap for now. Beware, and certainly wish you the best trading week ahead. Initial weakness going into Monday and Tuesday, and then we may well get a potential turnaround. Goodbye. Be sure to visit cfds.com for your trading needs. Goodbye.